Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is January 2nd, 2013, bringing another session of live charts to you. First day of the trading year, we're getting like another 27-point pop in this market to add on top of what we got on Friday, which is like another 25-point pop. So in 2 days, we've gone up over 50 points from the lows that we saw on Monday. I got to tell you, though, I did a post earlier today on the Share Planner reversal indicator showing that there was some concern that this market might be rolling over. That is something that bothers me a great deal and makes me a little bit hesitant to get long on this market going into the close here. What I may end up doing is getting some kind of combination of longs and shorts, maybe like one long, one short, or two longs and one short, or vice versa. But I'm nervous about this market just simply because that Share Planner reversal indicator in the past has been a very reliable indicator of what we can expect going forward. And last year it only flashed like 3 bearish signals like that, and it flashed one today. And to say that it has me concerned is a mild understatement. So it'll be interesting to see what the reversal indicator looks like after today's price action, because it only updates in the evening time based on the variables that I use in it. But nonetheless, I don't think it's going to change at all. I'm quite certain of that. So keep a good lookout on this market going forward. Don't trust this move entirely. Now, with that said, there has been some good technical developments for this market. We broke above these highs from back in December, which is like at 1448. We're at 1453 right now. If we hold, that is definitely a positive development for the market. We also broke this through this heavy resistance level off of the September highs that was declining ever so slightly. Busted through that today by a good margin as well. This trend line before was sort of like this. I've had to move it back down to where it connects this as being the new higher low. And now, within a matter of 2 trading periods, we create a lower low and we create a higher high. So very difficult to gauge the exact sentiment in this market, and I'm a little bit nervous about doing so, but whatever I choose to do, it's going to be something that keeps risk to a minimum. All right, let's go ahead and look at your charts here. I won't be able to get through all of them, but I'm going to get through the ones that set up nicely. CLSN, you have an inverse head and shoulders pattern here that if it breaks below this 740 level, that's probably where you'd want to get short at. I wouldn't trade it before then. It had a false breakout back on December 13th. Didn't do much with that, so I don't think it's got that great of a track record to be trading to the long side off of. CZR, nice break of the downward trend here from back in May of last year. It's formed a bull flag and then broke down and then popped back up to resistance. So I would say short term this thing's probably heading back lower with resistance looming overhead. DORM. If you're in it, great. Put your stop right underneath the lows of today. That'll help you protect the gains. Otherwise, don't chase this stock. That's not something you want to do. There's a good chance it's going to come back and fill this gap here that it created today. FSLR. Some resistance overhead, but it broke out above it today. Create a doji pattern there on the chart with today's candle, but it's sitting there right at short-term resistance with the price action overhead. I don't see a clear trading edge in this one. Like Dorm, though, I would just tighten my stop if you're long in it. I would put it under the day's lows. BAK. Another one that has a nice base. It broke out nicely, but it's over the 200-day moving average. But I think at this point you're chasing it somewhat. 1344 would have been the, actually I would say, the ideal breakout would have been about 1320, 1318. So it's at 1363 right now. Don't go chasing this one, but if you're in it, this is another stock with the price action from the last 2 days. I would at least try to book most of those gains by moving the stop loss below just a shade below the day's lows of today. AVB. I see an inverse head and shoulders pattern right here. Could make the case that over 137 this thing is worth getting long in, but it's a pretty messy chart, and despite breaking this downtrend, I don't know. A stock that's down today when the market's up so strong, that's something to be a little bit cautious of getting long on. CLSN, I see I already covered that one. EGHT, very volatile stock, breaking out of a bull flag pattern, which bodes really nicely for the stock, but it's given up those gains for the most part. I wouldn't chase this one on the pullback, or I wouldn't chase it at all, but I wouldn't buy it on the pullback either. So RPRX, well, I haven't traded this one in a long time. You got a little bit of an inverse head and shoulders here. Left shoulder, head, right shoulder, right in here. It's definitely breaking out at around 1550, yeah, about 1550. And I think you can get long on it at this point, but I would probably put a stop loss somewhere around 1509, which might be a little bit more than what you're comfortable with using. I know it would be for me. It's not a bad breakout stock. It's fairly decent. You're going to have some resistance to it at 1630 that it's going to need to get through as well. TASR. We talked about this a while back, possibly being a head and shoulders pattern. As you can see here, it basically nullified that entire pattern, and it's breaking higher. If you're short it, I definitely wouldn't be short it any longer. I'd go ahead and cut the losses on that one. This stock is thesis from before has been nullified. At this point, would I get long on it? You could make a case for like around 903, 904. It just looks like after 904 it's going to be fairly extended, so I would stay away from that one. ABFS. This is another one. I mean, you get the nice little pop up. It's a gap up, and then it just craps the rest of the day. Those make me a little bit weary. This one has pulled back about 3.5% or so. What was the highs of the day here? Yeah, it's about 4% almost that it's pulled back since the morning. I think you gotta be careful with this one here. You don't want to chase after it, when it gives you that kind of a candle. The 5-minute chart shows a bit of a breakdown over here, up in the upper left hand corner. Upper left hand corner. It shows that it's broken down on the 5-minute chart. It's bouncing, but it's bouncing right into resistance at 970. AIG, another gap stock. I hate trading stocks after they've gapped up like that. It was a nice setup. If we could have had it break out of this pattern today without gapping up, that would have been a great stock to get long on. AMTD. Gapper looks good if you're long in it. I would just move up my stop below today's lows. Nice little uptrend in place here. You do have a lower or higher low in place. That's positive for it. Looks good to stay in, but not necessarily get into for the first time. ATNI. Downward trend line here, finding some resistance at the 50-day. Goes back to the other one. I would be very wary of a stock that's not trading higher today when the rest of the market's up so strong. So this stock falls into that category. I would stay away from it. False breakout and not worth trading. BPOR. Same thing here. Trading lower despite the market trading higher. I'd stay away from it. CRM. I feel like I'm being really critical of the stocks today. I don't mean to do that. I'm just, I think there's a little bit of a caution for me with this market here. I'm not overly trusting of it, and it's probably tainting a little bit of my view of the market in general. So, tried to break out. CRM did. Failed to do so. Hit the resistance level and sold back ever since. That's a good reason to be weary about this. I'm not big fans of these steep breakouts of ascending trend lines on top, so not crazy about this one either. eBay. Now this has got some potential to it. 5302 is probably, let's zoom in a little bit here. Let's say like 5311 is probably an ideal stop loss or an entry. If you can put your stop loss below the day's lows at say 51.99, I think that's how you would want to trade that. Doesn't look bad at all. A little overextended, but you might be able to get a few points off of that thing. AVM. All right, that chart is not coming up. Oh, hum, H-U-M. I got to learn how to read my writing better. Another one of these gap and crap stocks. I wouldn't try to play it here. I'd give it a couple days to play out and see where it goes. If it can consolidate above this 68.50 level, it might worth be getting into like on Friday or something, but not today. LPX. Hitting the highs. Almost looks like it might be hitting a peak here. Can't really know that for sure, but you want to buy this one on the pullback to this 50-day moving average. You can see where it's tested it multiple times before and rocketed off of that. So you can get a big pullback to the $17 level over a period of time. I would take that. Moss, another gap and crapper. Not overly excited about that one yet. Ideal time would have been to get in on Monday when it was engulfing the previous 3 days of price action. Actually, more than that, like 5 or 6 days of price action there. Friday looked pretty good, but to try and get in at this point, you might be chasing. So, PHM. All right, last stock. Yeah, I'm just not seeing into this one either. You have a bull flag breakout here, but it's giving it back. It's up 2%, but giving it back. I wait for this gap to fill first, maybe a consolidation, and see where it takes you on Friday or Monday of next week. All right, that's going to do it for now. If you guys have any questions, I'll be in the Splash Zone chat room, and hit me up with whatever you got, man. All right, y'all have a happy new year, and let's make 2013 the best yet. See ya.